Good afternoon. Welcome to ABC 123 Trader. Today is March 28th, 2021. And let's start taking a look at today's video. But before I start, all forms of trading carry a high level of risk, so you should only speculate with money you can afford to lose. You can lose more than your initial deposit and stake. Please ensure your chosen method matches your investment objectives. Familiarize yourself with the risks involved, and if necessary, seek independent advice. And the U.S. government required disclaimer is Commodity Futures Trading Commission. Trading financial instruments of any kind, including options, futures, securities, have large potential rewards, but also large potential risk. You must be aware of the risks and be willing to accept them in order to invest in the options, futures, and stock markets. Do not trade with money you cannot afford to lose. Alrighty, now let's get into it and give you some education for today. Alrighty, guys. Sorry, it's been quite a while since I've been doing a video. I've been kind of on a hiatus, on vacation a little bit, trading a little bit, just doing all this and some programming. And today, what I really want to stress, I guess, I have questions. I always keep on getting emails, some from regulars and different traders ask me all these different questions. As how do you scalp? How do you do this? How do you control your stop losses? Where's the best area to enter? I can't answer all those questions, but I can try to give you an area. What you have to understand is basically it's the structure of the market. I trade the NQ because I like the volatilities and I like the fast moves, but it doesn't really matter what you trade. The bottom line is you have to look at the big picture and you have to look from the top-down approach. And if you looked at my previous live sessions, majority of the time I'll start from a daily bar to 4-hour bar, etc., etc. So what I'm going to show you today is, and the reason why it's so important, and hopefully you might get this aha moment of where to enter and being patient, because the majority of the trades is you can enter a trade, but many times people can't not figure out where a target is or where to exit, what is your risk reward, etc. If you can figure out risk reward, if you can figure out I won't say chickening out, but not trading too often, you can be a very consistent trader. So the very first thing what you have to do, and what I'm going to actually go right even farther back in time. I'm going to go to a monthly chart. Okay? The reason why I want to do a monthly chart is, let's see, since I guess we have the Trump years and now we're in the Biden years, let's start taking a look of how the market has been performing right now. Good morning. Welcome to ABC 123 Trader. It is, I guess, almost noon, and I'll do a quick video up and just playing around on the Discord this morning and just listen to the chatter of people and understanding how everything works. And I'm seeing methodologies, things turning around here, things turning around there, and yeah, it's been a crazy day. I'll be honest with you. It was. I almost got bit, but I had to turn around quickly. And I thought the market was going to go down, hitting my 127, and within a few minutes, boom, cashed up really quickly, and then got in here, or it didn't hit the 127. But anyways, as I digress, one of the videos today, someone was requesting how to use tick range. So I'm going to create a range chart. You can use Unirenko. I'll keep it on range for now, and then we'll switch to Unirenko. Put 5 days on, just to give enough information, just in case. And lo and behold, we have a 4-range chart. You could use a 6-range chart. It really doesn't matter. Okay, let's remove all drawing objects here. Oh yeah, these are permanents, so I'll get rid of that one as well. So as you can see, how everything moved crazy up and crazy down. So what I'm going to show you on the tick range, I'm just going to leave it as is so you can understand what the original methodology was on the tick range. And I'm going to go to NQRQI as well. So the methodology on the tick range, what we have here, let me move, I gotta move my mic here, sorry guys. Okay, on the tick range, we have uptrends and downtrends. And what I did is I also added the trend tracker with it for just in case if it breaks out. So we could see where a strong support resistance. So this morning, when the market takes off, and always watch, see how it just exploded right down. First few minutes actually was just vibrating, and then it took off, and it hit my Fibonacci down, almost hit the Fibonacci, and then it started to reverse. But what the methodology on the tick range is once you start breaking from a phase, okay, on the sell phase, let's go here, it went really fast. What you want to do is place an order on the line and take an order. Take an order in line, makes a profit target. Here, this was supposed to be another sell, but it failed on you. And then when you start seeing yellow color bars or salmon color bars like this, what it means, it's kind of like that consolidation pattern, trying to decide which direction to go on. The salmon color is usually the bias of a continuation to go down, and the yellow is usually a bias of a continuation to go up. But you have to take it with a grain of salt. On market open, no, you got to let it play its game. And because of market open is always very volatile, it's going to whip out like crazy. But when the trend starts activating, let's say we break this trend tracker here. We had our first impulse move, first trade here, away we go. Here's our second move, and as you can see, it's been tapping, 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 and then you can start reaching profits and profits. No, I won't say profits, targets, let's say. But because the NQ is so volatile, this ranging is very difficult to control. A couple years ago, it had a better harmonic because the Nasdaq wasn't at these crazy levels. It was around 7,000, 4,005, 6. So it wasn't as wild. So if I go to the YM today, let's do the YM. What you'll notice on the YM, you'll see more grouping and consolidation. But when it does do its pull down, see how it sits much nicer, and another second opportunity. And right now, it went down to a sell-off, and this one was an aggressive sell-off, and this would be another opportunity. Okay? That's how the tick range works. But I'm going to show you a few options on the tick range, and then I'm going to show you what I've actually not changed, but, and I'll not actually change, but what I wanted to, the other options, what you can show on your chart. So, for example, this thing is called a range line. And what I wanted to know is, and I put these our numbers here for, let's say, tick size and 25. What that means is, when it starts getting, you're watching, as you can see here, this is the current ranging of the market right now on the YM. If we go to NQ, the market was ranging here, and as you can see, we broke out of this range. So while we're waiting and waiting and waiting and waiting, here was our breakdown again. Okay, we had a nice move up, one opportunity to buy in. We made some cash here. Move down, possibility, and if it goes down, see, I could take a sell here, hopefully take a sell here, and continue. It is vibrating quite quickly, but am I on the right side of the trade? That's the question, because for that little move there, ruler, from here to here, see, it's going to turn around again. That's a 6 point loss here. Now look how big this range is. This is much higher. They're playing these stupid games. So with the Nasdaq, what you have to watch out for, this is where we get burnt all the time, right? Back and forth, back and forth. And now we have a huge range. And what I want to do is I want to watch this range shrink one direction or the other, because this thing just exploded. We could have cashed out the first breakout down here, on the breakout of the range. But once we start getting into a normal trading rhythm, such as this, one opportunity, two opportunities, three opportunities, pull back, and then away we go again. I look at other charts as well, just to see exactly what's happening, because we're playing back and forth here. So now we might have a possibility of a breakout opportunity right here on this range. Let's see how she's tapping. And then we look to the left, look where our support and resistance is. As you can see, we have a couple of swings that are holding it back. It needs to pop that before we can go to this next level way out here. Okay, so that's what that is. This area, and you can always make it more restrictive. So, for example, if you were just try to get a quick scalp here from 97 to 601 or 605, you would already made a few points, and now we know we're trending up again. So now what we want to do is take an opportunity right on this blue line here, and hopefully it taps and goes for a big run. Okay, now let's go back. I'm going to close this range line here. We have region backgrounds. Do I have the region backgrounds on right now? Yes, this is the region backgrounds right here. Okay, and what we also have turned off at this point in time, I have a trend background. I'll put it to 50% just in case, because this is a video, so you can see how the market's performing. So we have the downtrend, away we go, turns up to the uptrend, but we're watching, back to the downtrend, away we go, here's our uptrend, away we go, and decision, and see how it's playing back and forth. So I also have that as well. And see, when you're starting getting these kind of patterns here, you know you're in a chop. Okay? Now let's keep on going here. I'm going to turn off this background. We also have channels. And so if you're trying to figure out what's happening on the channels, let's go this. Reload. Oh, it is there. Sorry. See how the channel just went totally whacked? So when the next swing starts activating, this channel will probably go from here to here. This line will probably angle out this way, and maybe we're channeling like this. We'll find out right away here. That's how the channels work. So you have many different options of looking just using the tick range. Okay. But what I found out. This is especially for NASDAQ, but let's go to RTY. RTY 06-21. Okay. Let's see how RTY is performing. RTY has been going down all day. Ooh, that would have been nice. Actually, I should start looking at the RTY again. And as you can see, if we were taking the RTY from 1046, we have one really nice opportunity. Second opportunity, third opportunity, reversal, comes back down, another opportunity here, another opportunity, another opportunity. Right now it's a consolidation phase. As you can see, this is the stuff that kills you, right? Like you're saying, how the heck do we trade this? Now, what I've done and what I was looking at, what I'll do with the tick range, I'll add another tick range. And with this tick range, I'm going to turn off, sure, I'll keep the candles on. What I will do, I will just increase the range size. I'm going to try a 15, that's the one I use for NASDAQ, but we'll see how aggressive it is on NASDAQ, or for the RTY. Let me see here, salmon, red. 15 can work as well. Okay, so I created a 15 range. And what I will do, when I see, for example, oh, this went down all day. That's okay, Bart. What I will do, just looking at how the chart in the whip is, let's go to market open. If I see a down bias on the main line, I will look for sells, okay? Even though this thing turns blue and is going up, I'm gonna wait for it to start breaking down again, and I'll try to take my next trade over and over and over again. If it does a serious retracement back up and you can see the blue going up, saying, oh, we're going up, and guess what? It's starting to vibrate on the main band, away we go again. So we can get a better trade opportunity or secondary trade opportunities. This is RTY. Let's go to the YM and see how the YM is performing. Same thing, 15 range. This was 856, so let's go back to 930. Actually, this one took off early, 935. It actually reversed compared to what NASDAQ was doing. So right now, this was supposed to be a buy opportunity, as you can see here. Okay? It went from a buy to a sell, but we had to wait. Indecision, 10 o'clock, look at that. Even though it was going down, I didn't care. Indecision. Now the red is starting to form. From the red to the red, when it starts activating, I can now take my trade. I know it took quite a while on the YM, and that's fine. I would rather be on the right side of the trade. Here, even this one was a little bit late, but I mean, you can figure it out with your support and resistance. But I mean, with this case, if I know it's working really nicely, like when these things are grouping, then you have a better chance of opportunity of a sell and a sell, right? These two are lined up for your push down, but you make your profit. But I would rather do that and be a little more safe so I can take a proper trend, even though it might not look like it's that much. Let's say you break out, let me see here, the first blue aggressive. I mean, you could try it early and try to go to this part and keep on going. But let's just be as conservative as possible. Okay, so we had our first mid-band. Doesn't look like it's much, but it's still $200 on the one side. Vice versa, even though it was a slower swing, and maybe these swings are too big, I might have to reduce it to a 12 so I can get an earlier entry. Let's go ruler here. Here to straight down, boom, all the way down. That was our 81 move. So, I mean, it is possible. Other than that, I'm just going to shut down this video, upload it so you guys can understand how to use the tick range. But basically what the tick range is always try to go for your trade red on the mid-band, blue for up, red for down. Other than that, you guys take care and have a great day.